What it?
Hey Pete, can you hear me?
Yes, sir. I can hear you now.
Great. Well, in that case, I guess we'll start. Um, I guess I should say I'm coming to you live from Nashville this morning. I was here for a meeting and a conference, and this is a great place to have a meeting. In fact, Charlie Pride was playing in the restaurant in the hotel lobby this morning, and I think doing pretty good given his age. I thought he was getting around all right, and it seemed to make sense still. So the Charlie Pride fan club was having breakfast in our hotel, so we had a little bit of excitement here. So kind of fun to start off the day. So uh, first off, thanks for inviting me, Pete. I appreciate the opportunity. Megan, Dr. Clayton, thank you very much. We thought we'd just kind of talk about livestock market trends and you know I'm going to hit about three things, broad categories. I'm going to spend a little more time on cattle. We'll talk a little bit about trade, particularly beef trade. And I think that'll let us get into a bunch of the tariff stuff and things like that. And then I got a kind of a third bullet I just called other stuff. I think there's some interesting things around going on, particularly related to tariffs. Some of the other species I think are pretty interesting. So we'll do some of those too. Y'all ask questions whenever you feel like it. I look a lot of times I tell groups the questions are better than what I had planned anyway. So I appreciate the opportunity to be here. So kind of I got to use the button at the bottom. Uh, I'm going to start with kind of a little bit overview of the cattle market a little bit. If we kind of think of some conditions that are going on, really we're headed towards record beef production this year. The most beef production for a year in our history, over 27 billion pounds it looks like. So I think that's a really important backdrop when we talk about calf prices and cull cow prices and whatnot. Uh, we're looking at a lot of beef production, and any times we have increasing production, you know what that means for prices in terms of a general trend. You Seasonally, beef production starting to pick up, particularly steer slaughters coming out of feedlots, climbing as they should be doing seasonally. So I think that's kind of setting the tone for what we're seeing this summer in terms of prices, particularly over the last couple weeks. I'm going to argue too that we're in a period of beef demand that it's the best we've had in 25 years. I think we can argue the last 3 or 4 years has been the best beef demand conditions, not only domestically but our export markets as well. So for the first time in a long time, we can talk about record beef production, but we've also got really good beef demand by consumers absorbing that increased production. And so that's a case. I'd say we got to go back a lot of years to find this kind of condition where we're able to uh, uh, use those products, get those products, demand those beef products, and really cushion the blow of rising production. The other the other bullet I've got listed there is we're doing this in the backdrop also, not only record beef production but record other meat production. We're going to have record pork production this year, record chicken production. So our total meat supplies are increasing. So if we think about that from a beef or some of a range context, some of our range livestock, we got a lot of competing products to compete against. Uh, I'll show you in my other stuff. I got a hog price chart that will illustrate the effects of the hopes of rising exports of pork, particularly going to China because of their African swine fever disease problem on the pork side. So I think we got some interesting pork stuff going on there. And when I put these slides together, I must admit I forgot to add something that I wish I would have in hindsight, and that is the show a little chart of corn prices. As we think about feed costs, with all of the flooding you've seen on the news, delayed plantings throughout the Corn Belt, we've really got a pretty strong rally going on, increasing feed costs. And if we think about feed costs and calf prices, they move in opposite directions. One of the pressures on our feed costs, on our calf prices, particularly in the last 2 or 3 weeks, driving calf prices lower has been corn prices and feed costs going the other direction. So I want to make sure I at least mention that here, and I'll show you some on some prices in a second. I think it will drive that home. So, I think that's a pretty good backdrop for where we are. I wanted to use a couple of charts just to show cattle inventory in the U.S. And I'm going to illustrate this first with our cow inventory, really from January 1 is what I'm using. This red line down here is the number of beef cows. The dotted line down at the bottom is our dairy cow inventory. Our data comes out reported by USDA at the end of January every year and reflects January 1. And so, if we look at our cow herd, and I've just included back to 1989, you all know the cattle industry is a cyclical industry. You can see the decline in cow numbers, under 30 million head in following our drought. And, as we see this rebuilding after the drought, also driven by record high calf prices in 2014 and 15, we've rebuilt the U.S. cow herd to the level it was before our big drought started. And so when we think about cattle inventory nationwide, we've got the most cows we've had in a decade, the most beef cows. And so we certainly have a cyclical expansion going on in the cow herd. I left this green arrow down there on the dairies. I think one of the things, if you don't follow dairy very much, it's not much of a range critter, but we're in the second or third year here of some very difficult financial conditions in the dairy industry, and so you can see my statistic there. We were down almost 1% year over year in dairy cow numbers. This kind of financial crisis on the dairy side of things continues to drive more and more dairy cows to market. We're in the midst of really the next big ringing out, if you will, of dairy farmers around the country, particularly smaller dairy farms. We have large numbers of dairy farms going out of business, being forced into bankruptcy, and that's nationwide, particularly among smaller farms. So I'm going to show the number of dairy cows going to market here in a minute, and I think that'll drive that point home. For a lot of us, we don't think about the dairy side of things yet. In the cattle market, the dairy industry has become more and more important in beef production. So, I mentioned that nationwide, in terms of beef cows, we have, we've recovered from the drought. But if I look at Texas, the number of beef cows in Texas, which is this chart here, I've gone back 100 years. That's how much data we have for the number of beef cows in the state. So just for some context, I kind of like looking at the whole 100 years of this. Obviously, to the right of the screen, you see the effect of the drought, where we lost over 1 million, or over 20% of our beef cows in the state during the drought. And you can see that we're rebuilding as pasture and range conditions have recovered and profits returned with record high calf prices. We responded by having more cows. I think it's pretty interesting to look at that change from before the drought to today. And what I think is really interesting is nationwide we have more cows than we did before the drought. But if we look at Texas, we have not recovered our cow numbers from 2010 or 2009 before the drought. We've recovered a little over half, or about half of those beef cows, and I think that highlights the effect of a drought, of a severe drought like that, where we think about what's the effect on what we think about in terms of stocking rates, or what the carrying capacity of our rangelands might be. I think it also highlights the conversion of land to other uses. whether it's hunting or recreation or whatever those are, or just plain urban sprawl, we've got a few less cows than we did before the drought. So, I think that's some pretty interesting. It gives you a long history and long context of cattle numbers in the state, particularly beef cows. And I like to use that chart a lot. I think it's kind of an interesting one. So, if we jump to the next one and take a look at calf prices, what are we seeing for prices around the state? That red line, the fat red line, is a 5-year average. The dotted line is 2018. The blue line is where we are this year so far. And we had a pretty nice seasonal increase in 500 to 600 pound steer calves this spring. And that's really come to a screeching halt as prices have taken a sharp decline over the last month or 6 weeks or so. And so, we're really seeing a couple of things going on driving those prices. One is, which I'll show on the next chart, is falling fed cattle prices seasonally. Our fed cattle prices are declining. But, a good share of that increase, of that falling calf price, is related to corn prices going from under $4 to about $4.60 in the last 3 weeks or so. We've got a pretty sharp increase in feed costs, and when feed costs go up, the price a feeder can pay for those calves goes down, and we're seeing that directly. And I'm just going to show 550, 500 to 600 pound steers. If I showed feeder, heavier feeder cattle or some lighter weight calves, we'd see the exact same thing going on with falling prices heading into summertime here. So I think it's pretty indicative of where we're going. One of the things I might point out too, if we look at those levels of prices, calf prices have tended to be below a year ago for much of this year, and now we're down close to $10 a hundredweight below a year ago. That's really, I think, is most all the difference there is reflected to a different environment of feed costs. And the next couple of weeks are pretty critical on the feed cost side, because it's going to really determine how many corn acres really get planted in the corn belt, if they get a chance to dry out or not, or if we end up with significantly fewer acres, which would, you plant fewer acres, you're probably going to have less at the come harvest time and higher prices, and I think that's right where we are. If we look at fed cattle prices for at least what we think of as a spring rally, we're above a year ago. We've seen over the last month some falling prices, as we normally do going into summer. Even though we have the grilling holidays and things like that, even though we have those grilling holidays, we really get hit with growing supplies of beef, more cattle going to market, and that's just related to biology and the production system. So I think that's really a seasonal reflection of where we are in cattle prices, even though prices are above where they were a year ago. I see a question down there about how will the occurrence of the BSE case in Brazil affect U.S. beef markets. That's an interesting thing, I think, in that they put it this way. I think it's interesting that they self-reported that they found one. And I think, a couple years ago, the U.S. allowed them to start exporting fresh beef to the U.S. That didn't last very long. In fact, it didn't last very long because upon inspection of the beef here, they had a very high rate of failed inspections. Not for that, but for other reasons, and so we shut off those imports. I think the one place I've seen so far that it's going to affect is their exports to China. China's been pretty strict on a lot of food safety and production system processes, and I saw that the Brazilians took the step of not exporting to Brazil. I think where the effect will be often in trade is a lot of indirect effects. So what I think the key will be is how does it affect Brazil's exports to other markets beyond just China? If they truly see other countries shut off their exports, then we become a source of more beef to export, and it's going to help our prices. If other countries view their inspection processes as being adequate and doing a good job, then those markets are liable to stay open, and we'll see not much effect from us or for us. But on balance, we'll probably see some positive effect for U.S. prices, because we become a more attractive product in other parts of the world. So take a look at steer slaughter. I think that's a really good question. So thanks for typing that in there, and we'll see if we get some more. Taking a look at steer slaughter, I mentioned seasonally. Going into summer, we produce more beef. We send more cattle to market. That's just biologically the production system. Cattle come out of feedlots in increasing numbers heading into summer, and in this steer slaughter chart, you can see that's exactly what's going on. In fact, a week ago we had about 365,000 steers going to market, and that's a pretty big number. That's the highest number in at least a couple of years. I didn't go back and check. I think that's the highest weekly total in several years. You'll see it's well above the 5-year average, and certainly above last year as well. So we're really getting into some bigger numbers that reflect more cows, more calves, cyclically increasing beef production, and so we got more steers going to market. So yeah, I think that's a good highlight for what's going on, why we're seeing lower prices. I included this beef production chart for a couple of reasons. I mentioned I think we're headed for record beef production. This year beef production is a little higher than it was a year ago. It's interesting. It's an interesting data thing in that we're doing this webinar here this week, but my chart goes through last week. That's the data goes through that, and look at that sharp decline in beef production. And the simple explanation is that this is weekly data, and the last week of data I had was for the week that included Memorial Day, so people didn't work on Memorial Day at packing plants, and so you see beef production take that sharp 1 week decline. So as we get the data, beef production is going to rebound back above a year ago. And we'll see, I think, some continued increasing beef production as we go through the year. I said we had high increasing beef production. I want to highlight the cow market for a little bit, and I'm going to do that with 3 charts kind of on cow slaughter. You can see on this chart we've been running the number of cows going to market way above a year ago. Anyway, you can see I got distracted for a second. I guess, Pete, I'm like you. I multitasked. I was trying to. My son texted me something, and it beeped on my computer. So I was trying to turn that thing off. I wish I knew how. Hopefully, not everybody else can see those messages either. So anyway, we got cow slaughter well above a year ago, so a good portion of that increasing beef production is coming from old cows. And what we do with most, or the largest portion of beef cow, older cow beef production is really our ground beef market. So we've got growing supplies of ground beef as more cows go to market. Cows come from 2 places. We got beef cows and we got dairy cows. So if we look at beef cow slaughter, that's also running ahead of a year ago. And I think that makes a lot of just simple sense in that we've got a bigger beef cow herd. If we have more cows, we cull more cows and more go to market. So we've got part of that there. I think it's also indicative of really slowing growth in the cow herd for for the future. That rate of growth, that rate of increase is really slowing, and quite honestly, with lower prices, lower calf prices, uh, and its implication for lower profitability of cattle production, we may see this continued more cows going to market than a year ago. Uh, I think this chart on dairy cow slaughter is really an interesting one. I mentioned that the financial difficulties in the dairy side of things that have really caught up to uh, it's really caught up to a lot of the industry. They've hung on for a long time with low milk prices, and it has really, caught up. If we look at the number of dairy cows going to market earlier this year, where we were over 70,000 head a week, uh, you have to go back to the dairy herd buyout days of the mid 1980s to find weekly dairy cow slaughter this big. We're moving a lot of cows to market, and so a big portion of this increase in cow slaughter is really being driven by the dairy side. So, we worked through a big chunk of those supplies. Dairy cow slaughter has fallen seasonally, yet we're still running ahead of a year ago. So, and I think it's likely we've got a ways to go still before we see prices return to profits for dairy farmers. So they're not out of the woods yet on this, and so we probably expect to see more dairy cows going to market. I got asked to do a presentation not long ago on, and the producer group asked me to talk about how can they avoid selling old cull beef cows for 15 cents a pound. And of course, the first thought in my mind was don't sell them, because that's how you can avoid selling them for 15 cents. But I think it's really instructive to think about this. I took prices from Oklahoma City for boning cows, 1,200 to 2,000 pound. I use Oklahoma City because that's really the best, most complete data set we have, and I just graphed it back to 2007, and right over here where I've got that green dot is last fall and into early this year, and cull prices in that market for those kinds of cull cows, we were really between 45 and 50 cents. But if you went to some country auctions in Texas, you would find particularly old thin cows, didn't have a lot of flesh on them, clearly at the end of their, productive calf bearing life, there were cows that sold for 15 cents or less. And I think what's really interesting is that, remember I said we've got the most cows since going back before the drought, basically 2009 in the U.S. Lo and behold, we've had the lowest cow prices since, back last fall and early this year, since 2009. So we got the most cows since 2009, and lo and behold, we got the lowest cow prices since 2009 also. It's and a good part of that supply on the cow side is coming from the dairy side. So, I don't think, that's a huge, that shouldn't be really a huge surprise to us. If we got the most cows since 2009, we probably shouldn't be surprised that we see the lowest prices since 2009 also, and lo and behold, that's what we see. I thought I'd include cow prices in just another format with slaughter cow prices in the Southern Plains. If we use this 5-year average as a sort of a guide, we tend to see cow prices increase from the first of the year into the summer. Seasonally, they normally increase and then fall off late in the year. We usually see our lowest prices of the year in the fall, because that's when most cows across the U.S. are culled. So with a lot of ups and downs, the trend has been for some increasing beef cow prices so far this year, but a lot of ups and downs, and certainly well below a year ago in terms of price. And I think that's probably going to remain that way, just simply because of numbers. I think the thing for cull cows, if I was thinking about prices this fall, as I maybe cull out my herd a little bit, the key is going to be the dairy market, and Are we done by that point with the large culling of dairy cows? Do we get some recovery in milk prices that sort of stabilizes that and stops the flow of dairy cows to market? Then I think that gives us a chance for some prices that may even be a little better than they were the last fall. But really driven, what's going to happen there is going to be driven by the dairy market. I want to do about two charts that I want to talk about beef demand for a minute. And the first one, somebody might tell me, well, that's really actually a supply chart. This thing is, of all the beef we produce that is USDA quality graded, prime, choice, select, if we took a look at that, how much of it grades choice is what this chart is telling us. And so of all the beef that we grade, so far this year, this solid blue line, we're grading between, well, for the first 3 months or 4 months of the year, we were grading about 73% choice. That has fallen off seasonally, and the last week of data, we were actually under 70% grading choice. Take a look at that red line, so that would suggest that the 5-year average from 2013 to 17, we graded about 68% choice. So I like to use this to think about the beef we're producing a little bit. Some 25 years ago, we had the first big beef quality audit where the industry recognized, pushing 30 years now, but the industry recognized that we were going through a period of declining beef demand. And one of the solutions that, from an industry perspective, was we had to produce a higher quality, more consistent product. And by quality, I'm going to use quality grade. I think it just so happens that because of those efforts, if you think about it, the cattle we produce today are very different from the cattle we produced 30 years ago. Now we have generally over 70% grading choice. If you ever go to a fancy high-end steakhouse, you'll see prime beef, and a lot of times they will say only 2% of the beef we produce in the U.S. actually grades prime. Well, we're actually pushing 10 and 11% of our beef production of what's grading prime quality. And so we've got this huge growth in quality, more choice, more prime beef. And what I would argue is that is hitting our market today at exactly what consumers are asking for. I think our consumers are looking for higher quality. Remember, when we're talking quality, we're talking marbling, right? Intermuscular fat, all the things that fat brings with that, whether it's the relationship to juiciness, tenderness, that overall eating experience. That's really what we're talking about here, and that our consumers are looking for a higher quality product, and as an industry, the cattle industry is supplying it, and it just so happens that those two are coinciding. More choice beef, more prime, just what people want. And I think that's indicative of kind of this changing market, this changing consumer dynamic and products that we're looking at. The second thing I would do in talking about demand is I'm going to use an index. Demand, as an economist, I'll tell you, demand has two parts. It's price and it's quantity. It's how much me as a consumer is willing to pay for something, how much I want to buy for a given price. So if I put those two together and use an index, my index starts in 1990, so that has a value of 100 as my base year in the index. Look at the last 5 years, 14, 15, 16, 17, 8, how many years that is? Yeah, 5 years. If I look at that, you look at those values for that index, and that 5-year period is the best 5-year period going back to at least the 1980s in our chart. So at least in the last 25 years, this is the best demand we've had consistently over a number of years. And we see some slight decline in our index value, but we're increasing beef production. We're also increasing exports. So this reflects domestic consumer demand on the quantity side. So, also 14 and 15, we had record high beef prices as well. And so we continue to have people buying beef, buying those products. And I think I'd argue that this is the best demand we've had in several decades. And I think this kind of gets at that picture of what's going on. I want to mention trade a little bit. We already got to talking about trade already. I'm just going to use a couple charts here. This first one is the amount of beef that we export in the U.S. Beef and veal exports. So far, exports this year are running a little bit below a year ago, but not a lot below, but running a little bit below a year ago. You can see that throughout the course of a year, from January to December, the general trend is monthly we increase our beef exports as we go throughout the year. If I was going, my projection of beef exports this year is we're going to be very close to a year ago. We might be a little under a year ago, but it's going to be pretty close. But the overall trend for several years is larger exports. We're finding more markets. We're opening more markets. I think a couple of things are working against us in the beef market. One is our exchange rate. We've got a stronger dollar versus most of our, for most of our competitors and our customers. That tends to pull back our exports a little bit. So that's part of what's going on. And you really can't avoid the tariff issue. Although most of our tariffs, the retaliatory tariffs we're talking about, they're more important on the pork side, and I'll talk pork in a little bit, but they're still an important factor in what's going on here on our export side. If I look at imports, we're importing a little more than a year ago. We're importing a little more than the 5-year average. I find trade interesting. There's often a lot of indirect effects that happen. There's always a lot of things that can go on that can affect those levels. One, for instance, one is when I talk about really booming beef demand, one of the areas that our consumers like a lot and has been a booming area of beef demand is in hamburgers. We think about gourmet hamburgers. Think of some of the chains that are out there, like a Five Guys, places that really advertise a really great hamburger. Well, one of the things we consistently don't have enough of is lean beef trimmings to make into ground beef products. Most of what beef we import, most of it are trimmings from Australia and New Zealand that are very lean, that we use to mix with our beef to hit all the different fat to lean ratios you might see at the grocery store, right? So if you go to the grocery store, you may see a 73% lean, 27% fat, 80-20, 90-10, 96-4. All of those represent a different blend of fat and lean. And so we tend to be short or have tighter supplies of very lean beef, and so we buy those from Australia and New Zealand. It turns out that those countries, particularly Australia, has gone through a pretty serious drought, and that's, when you get in, just like us, when you get in a big drought, you cull more cows, all of a sudden you got more beef to sell. Eventually, you don't have those increased supplies to sell, but we're still in the time where they got plenty of beef to sell, and I think that's part of our import. Good demand's part of it. Available supplies is part of it also as well. Here's another area that is something we don't talk about a lot, yet I think it's an area where the tariffs and the trade war is hitting the cattle side directly. So this chart is the value of the hide off of, let's say, a fed steer, and what we call the offals. Offals are just like they sound. It's, livers and kidney and tripe and hearts and stuff we just don't eat much of, and so we export it. If any of y'all are fans of liver and onions, that's great. I am not doing my part for liver demand. It turns out we export some 75% of beef liver that we produce. One of the areas that we've been hit pretty hard, not only on the tariff side, but also reflects, I think, a changing demand by consumers. Take a look at that difference to a few years ago. So this stuff is priced in dollars per hundredweight of live animal. So let's say a fed steer weighs 1,300 pounds. So that's 1,300 hundredweight times 850 or 950. So in terms of value of a fed steer going to market, the value of that steer is worth $1 a hundredweight less than it was last year, simply because of the value of what we call, well, you'll also see the term the drop credit, the value of products that drop off the carcass in a packing plant. The biggest part of this is the value of the hide. We export hides to Asia. A lot of them go to China, where they go to tanneries and they're turned into leather products that we then import back from those countries. So the tariffs that have been applied, the retaliatory tariffs, have basically hit all of our agricultural products, and they're, the hides are one of those areas. The first round of retaliatory tariffs from China did not include the hides. They chose not to do that because that's sort of a valuable product for them. Those tariffs have extended everywhere. The part of demand that I think is interesting, and one that probably is worth a lot more explanation or investigation, is I think we're seeing a changing demand for leather products. Even though it seems like every car you see on a car lot or around's got leather seats, I think we're seeing some changing demand, and I think that's decreasing the value of the hides. I think we've also seen in China over the last several years, they have had a big crackdown on their tanneries from a standpoint of environmental compliance. The tanning business uses a lot of chemicals. It's a pretty dirty business. And they've really cracked down on their industry, trying to clean things up. And so it's put a bunch of smaller ones out of business, and I think that's cut some demand for our hides here. So I think that's an interesting thing we don't talk about much, but we're compare where we are now in terms of the drop credit at roughly a little over $8 versus $13.50 being the 5-year average. Well, that's $5 per hundredweight, so that's pushing $70 a head lower value in a fed steer, simply because of the value of those things that we just don't think about much here. So I thought that was worth just kind of an interesting thing to point out. Now my other category is other stuff. Stuff's a highly scientific economic term we use around the office. So this is my catch-all. We got too many hogs that are out on the range, particularly of the feral variety. But in this case, I'm going to talk about real hogs and real commercial production. Take a look at barrow and gilt prices. Look at that increase in price just over the course of April, where we went from 45-cent hogs to over 80-cent hogs in the span of just 6 weeks. That is related to the growing concerns in China over African swine fever. There are estimates that they have slaughtered some 25% of their pork production. Of their hogs, which amounts to over 200. They got 25% of their hogs is more than we produce entirely in the U.S. That's to kind of put it in some scale. They have drastically had to reduce their herds. Not only have they euthanized herds that got the disease, They've had pigs that have died because of the disease, but also farmers sending their hogs to market. They may as well sell them now and get something out of them rather than wait and take the risk that they get the disease and their hogs die or they're forced to be killed. So this skyrocketing really of hog prices really reflects the market hopes that China's got to step in and import more pork, and that they've got to buy it from us, even though even after the tariffs have been put on, that it's still hog prices rise enough to make us competitive in the marketplace. So most of us, I think, expect that the higher hog prices are still yet to come in the second half of this year and into 2020. I think a bunch of this run-up in price is also related to U.S. companies who are looking at, oh man, I got a restaurant company, I need pork. I better lock in some supplies now while the price is low before the price really gets high. So I think that's why you see prices skyrocket and then they start backing off a little bit over the last couple of weeks. Is people have sort of filled up their supplies so they're ready for the rest of the year. I think what it really means is that we're going to see, I think, a lot of volatility in hog and pork prices this year, because we really don't know what's going to happen yet for exports based on what happens because of the disease. I can tell you as an economist, several things will happen in this pork situation in China. One is, if we think about, what does price do in a marketplace? Price regulates or rations demand. If pork prices go up in China, they're going to eat less pork. It also means they'll import some more. We're not the only place that produces pork, and so we may increase what we send them, but it's most likely that they're not going to eat as much pork as they did. Excuse me. I think we'll also see that they will import more other meats, chicken and beef. So there's some potential there, maybe to increase our exports of those other meats as they import more of those. But I think we're headed for a lot of price uncertainty, a lot of price volatility across the whole pork complex. And I've included one price chart, one that I think we'll all like. These are wholesale pork belly prices. Any of y'all like bacon, this is it. So in the wholesale market, or also if any of y'all go to some of the barbecue restaurants that have pork belly burnt ends, those things are pretty great. And it's really coming here from our belly market. I often use this chart with people to illustrate price volatility. Look at the ups and downs in the belly market over the last few years. The run-up this year, as people try to lock in supplies just in case, we ran bellies from about $1.10 to $1.75, and then now they've fallen back to almost $1.25. That's a lot of volatility, and I think when I say we're going to have a lot of price volatility, that's what I'm talking about in the hog complex across a lot of those prices. I also included hams. Take a look at this run up in ham prices. We normally see hams go up in the summer. This is a pretty amazing increase in ham prices. But I would use this to highlight the effect of several weeks ago, the U.S. and Mexico coming to some agreement on the successor to NAFTA, the elimination of the steel and aluminum tariffs, and the elimination of the retaliatory tariffs. We export a lot of hams to Mexico, and I think this part of this run up in price over the last 4 to 6 weeks ago, a bunch of that increase is related to a better ability, a reopening of that market, if you will, to U.S. hams. Now, what's happened since I made this chart? The announcement was made that we're going to put a 5% tariff on everything Mexico sends us, and that tariff is going to keep going up. Um, you probably can't expect a tariff announcement like that to go unresponded to. And Mexico is a huge market for our hogs, or for excuse me, for our pork, and so uh, again contributing to I think a huge amount of uncertainty ahead and volatility in prices is going to be what happens with all these tariff announcements that really just come out of the blue. So they're contributing to, I think those things are contributing to this volatility as well. Not to leave out a couple of other of our range critters, I thought I'd use a chart for feeder lamb prices. If anybody's interested in the lamb market, I'm a big fan of lamb chops, so I do some lamb work as an economist. I thought I'd stick in a San Angelo 60 to 90 pound lamb market. Prices have been a little lower this year than last year. We've struggled with large supplies of lamb in cold storage stocks and in freezers. We've also struggled with some large imports of lamb from Australia and New Zealand. I think that's worked to force our prices a little lower, but you know we're a little lower than the 5-year average so far this year, but not a lot out of line with the 5-year average of prices so far this year, at least in the feeder lamb market. And that gives you a decent notion of seasonality in lamb prices as well. This goes right along with the hides and the drop credits on cattle. One of the struggles in the lamb market, I'll tell you, this is something you rarely see in markets, and I would say in agricultural markets. This is the value of the pelt. So if you see, you know, lamb skins, you know, that got the wool on them, and you know, you might see them as car seat covers or whatever, or sometimes rugs and decoration and pillows and things. You'll notice that so far the entire year this year, it actually started last year, last fall, pelts have a negative value, meaning you have to pay the packer, you as a producer are paying the packer for the pelt, where packers are actually charging the producer or deducting the price of the lamb because the pelt has a negative value. In fact, they're better off just throwing them in the trash than they are trying to do anything with them. That's a pretty rare condition, and I think, you know, some of this is there is some tariff related things, there are some demand related things to the whole, broadly speaking, leather market, but I think this is a pretty darn interesting chart that you don't see very often, and you know, this is part of seeing lower lamb prices, is because of the pelt value, that value is now negative. So I think that's pretty interesting, and I figured, what the heck, we'll put that in other stuff. I also included a price chart for goats. Again, 40 to 60 pounds, San Angelo, Texas, goat prices, very close to a year ago. You certainly see a seasonal market with peaks, you know, in the spring and late in the year, falling off in the summer. But we've had, you know, broadly speaking, a pretty darn good goat market for a number of years, and this year been a little better than last year, at least lately, and certainly better than average. So since we were going to talk about range livestock, I thought I'd include our sheep and goats as well, so we didn't leave anybody out. You know, I find those to be pretty interesting markets, and I think both the lamb and the goat side are growing markets. The growth in the hair sheep, replacing our traditional wool breeds. I think the hair sheep have also allowed for expansion of some sheep broader in Texas than we think of maybe our Edwards Plateau, San Angelo area. I think we're getting a few more lambs out in some rest of the country, and also in the southeast, where the hair sheep have given an opportunity for people to produce sheep, where wool breeds didn't work very well in the south. So, you know, I think these two really have some interesting opportunities for ranchers. So I figured I'd throw those in as well. You know, I think the key, if we look at all this stuff, growing meat supplies, record amounts of meat production this year. We got some good demand for beef, but we got a lot of turmoil. And most all the turmoil, volatility, is really trade related. And I'll throw out another little statistic. If you look at beef, pork, chicken, turkey, milk, for instance, we export about 11% of our beef, we export 23% of our pork, we export about 18% of our chicken, we export somewhere between 15 and 20% of our milk products. So we're exporting 15 to 20% of our milk every month in the form of cheese, butter, whey, all these dairy products. If I went back 25 years ago, we didn't export enough stuff to matter. And the growth in our export markets has been to the point that trade matters. Exports matter a huge amount on all of our livestock species, and so I think that's going to continue to be a major source of turmoil and volatility in prices. Is really coming from the trade side, and I think this ASF, this African Swine Fever, is the latest great example of the effects of an animal disease changing trade flows and changing prices. So, whether it was foot and mouth disease a few years ago in other countries, African swine fever, porcine epidemic diarrhea in the U.S. several years ago, some of these diseases just bring a lot more effects on markets than they ever did in the past. And I'm pretty sure that's my last slide. Hey, it is, except for thank you. So, y'all got any questions for me?
Thank you, Dr. Anderson.
Feel free to type them in there. I'll try to look.
Feel free to type them out in the chat pod.
We'll see where we go.
Well, I had a question earlier, and Mitchell was asking if they could have copies of the slides. So, well, I have them. What I can do is I can ask
Pete,
these
you have
folks
them?
if
Do you have?
they'll
Or
type
do you
their
need me to
email
email them
address in the chat
out,
pod,
or whatever
then
you
I
want
can
to
capture them out of there, and I can email them here after a bit.
Okay.
With that, let me go ahead and say that I'm gonna go ahead and kick out a survey. I'm gonna go ahead. Yeah, and I just capture the emails and
Great. That sounds good.
I'm gonna go ahead and pop out a survey, fill out the survey, and we appreciate it. It's all the responses are anonymous. Again, that our next session is going to be July 11th. We have Dr. Mark Matoka going to be talking to us about Texas pesticide laws and regs, and actually has one CEU attached to it for laws and regs. Oh, I forgot to pop out the. Let me do that. If you get the web link and it kind of covers up your screen, you can always go back and click on your little icon on the screen. That'll bring you back to there.
Peter, you getting everybody's email address?